There's still a lot to learn about cryptocurrencies, but that doesn't take away the fact that this market has become one of the most relevant in the world. If you're here, it's because you're interested in learning about what else is behind cryptocurrencies. So, are cryptocurrencies our salvation? In this episode, we'll share with you 7 things you should know about cryptos. Hello everyone and welcome back to Novarise, your channel for financial education. Cryptocurrencies represent one of the most popular forms of investment in recent years. These have not only become a very important option for technology lovers, but also for those seeking to expand their investment portfolios towards new options that provide wide margins of return. To briefly talk about the history of cryptocurrencies, we must say that they were born in 2009, when the first crypto was created, Bitcoin. Since then, there's been more than 13 years of history full of ups and downs. Although it may seem like a long time, the history of cryptos is relatively short when we compare them with other forms of investment, such as the stock market, which has been around since the late 1700s. The trust of the people is very important when it comes to investments. Trust is what determines the value of an asset. So, how do cryptos work? Before talking about that, do not forget to subscribe to the channel, to like the video, and to activate your notifications. The first thing you should know is that cryptocurrencies are not issued or controlled by any banking institution in the US Treasury. These digital assets are stored in codes detailing who owns a specific amount of crypto. In short, all cryptocurrency creation and storage is based on technology. All this encryption or protection allow cryptocurrencies to remain out of the control of large institutions and minimizes the possibility of fraud or scams. All these digital assets can be sent between two parties without the need for a bank mediator. What determines its value? The value of cryptocurrencies is purely speculative. That is, there's no formula or mathematical calculation that determines their specific value. Taking that into account, we could say that the price of cryptocurrencies is set by the expectations of the market, the movements made by buyers and sellers, and the technology used to build that cryptocurrency. One of the cryptocurrencies that is a trendsetter is Bitcoin. The value of Bitcoin usually marks a path for the rest of the cryptos. Another interesting fact is that a person alone cannot set a trend in the price of cryptos, but a large volume of people working together towards the same trend can. Another factor that impacts the value of cryptocurrencies is the number of units available for sale. These systems tend to have a limited number of units, thus eventually reducing the amount of crypto in circulation. This is a market that's still relatively new, and its future value is yet to be determined. Where can I buy crypto? Cryptocurrencies can be purchased on various trading platforms. You can buy an entire crypto or a fraction of it. Just like you place your money in a physical wallet, cryptos are stored in a digital wallet. For those who want to find out more about digital wallets, here's an episode you can check out, after you're done with this one, of course. Why have they grown so much in recent years? Throughout history, large banking institutions have dominated the financial market, creating distrust amongst the people who wanted greater financial independence. All this gave way to new forms of investment, such as crypto, which also served as a storage of wealth. In addition to this, more people are hopping on the cryptocurrency trend, driving up its demand as well as its price. Remember, the value of cryptos is highly dependent on the value that people place in it. So if they believe the value should be high, then the price of it will be high. Yet, it's worth noting that although the price of cryptos have increased tremendously over the years, they have also drastically come down. And this leads us to our next point: the risk of investing in cryptocurrencies. Risk of theft or loss. When dealing with digital assets, many people think that it's impossible to be victims of theft. But there are hackers who are constantly on the lookout for security flaws to get hold of third-party cryptocurrencies. On the other hand, there are physical digital wallets, which can often be lost or stolen. High market volatility. The price of cryptocurrencies is not related to any measurable or real factor, making them highly dependent on the supply and demand of the assets. This makes the crypto market extremely volatile, and events such as a simple tweet can cause its price to rise or fall abruptly. The cryptocurrency market moves very fast. Once again, the cryptocurrency market is highly volatile. This is because the market tends to move much more quickly, and that's why you need to keep a close eye on crypto market updates. When a crypto begins to gain popularity, it's only a matter of time before more people hop on the trend of buying it, causing its value to go up. Cryptocurrencies tend to follow particular price patterns. For example, Bitcoin often leads the way with digital currencies, influencing others to follow its path. News about a hack, fraud, or price manipulation can cause lots of drastic movements in the price of cryptocurrencies. It is true, the cryptocurrency market allowed many to become billionaires overnight. But for every success story, there's another one for those who lost their money as a result of lack of monitoring or unexpected movements in the market. For example, Coinbase founder Brian Armstrong went from a fortune of $13.7 billion in November 2021 to just $2.2 billion in May 2022. Pros and cons of cryptocurrencies. For many, cryptocurrencies are a salvation, while for others, not so much. This is one of the most polarized forms of investments, and here are the most notable pros and cons of cryptocurrencies. Pros. There are no major regulations on cryptocurrencies, and they are based on a decentralized process in which large institutions do not participate. You can make transactions from anywhere in the world thanks to digital wallets. Its value is independently defined and it's not correlated with other markets or real money. Many people see them as the future of money, leading many to think that their current high value is just the beginning. And now, the cons. Price fluctuations change very fast, and for that reason, many investors end up losing money in the short term. The environmental impact of Bitcoin and other cryptos that use similar processes is significant. A study by the University of Cambridge showed that Bitcoin mining around the world consumes more than twice the energy of all residential lighting in the US. Although there are no official regulations yet, many governments have their eyes on cryptocurrencies, which could cause their value to plummet in the future. The equipment needed to mine cryptocurrencies can be expensive, and learning how to do it can be difficult for many. As you can see, investments in cryptocurrencies are part of the portfolio of many investors, and these have helped them gain new assets, both physical and digital, without risking their net worth. Would you invest in cryptocurrencies? If so, what are your favorites? We'd love to read your comments. And since you're here, do not forget to check this next episode that's going to help you complement everything you just learned today. Take care. Bye.